What's up, everybody? What's up? Listen, I am not supposed to be impartial, but for me, this next conversation coming up might be one of my most favorites of the day because it deals with crypto and digital currency. These are topics that I discuss almost every single day, and these two gentlemen are going to have the most fascinating conversation. They're going to look at it from a global perspective, but also too from a Western POV at the same time, and discussing policies associated with that. So I'm going to be in the back taking crazy notes because I think this is one of the most important topics of our time, in particular for a possible election that is coming up here in November. So this specific conversation is called Digital Currencies and Economic Freedom, Reimagining the Future of Finance. It's sponsored by Coinbase, and it will explore how strong crypto policies can embrace national security and ensure that the U.S. remains at the forefront of global innovation. I have talked to these two gentlemen, and they are brilliant and actually cool at the same time, so you can be both. Ladies and gentlemen, bring Guy Barron and Faryar Shirzad. Shirzad, sorry, Faryar.
All right. Hello, hello, everyone. As advertised, my name is Guy Barron, and I head up the global investment practice at the Tony Blair Institute for Global Change. We advise government leaders, heads of state on strategy, policy, delivery, and most often with tech as an enabler. And we do that in about 40 countries around the world. I am delighted to be here today with Faryar Shirzad, who is the Chief Policy Officer at Coinbase. And by way of background, Faryar leads the company's engagement with policymakers around the world. He has been a vocal leader in the global crypto policy space and a significant driver of shaping the policy here in the US. Before joining Coinbase, Faryar was a global co-head of government affairs at Goldman Sachs, and then before that, more active in politics in serving as the Deputy National Security Advisor for International Affairs, International Economic Affairs for President George W. Bush and his representative to the G8. Let's jump in and get right to it.
Yep.
Maybe initially a bit of level setting.
Yeah.
So what is crypto?
Yeah, it's a really, really good question. And it's actually a question people don't often ask often enough. Crypto fundamentally is a technology that allows you to store and transfer a unique digital token individually. So I can have a unique digital token that I can store on my own and move it just like I would move a text or an email. Now, why is that significant? It's significant technologically because until the development of crypto technology, that there was no way to prevent the easy duplication of a digital thing, a digital email, a digital text, a digital picture. They could be copied infinite times. The question as we live our lives digitally is, can you have a unique digital token that represents an ownership interest in a thing? And that token can be money, it can be a hunting and fishing license, it can be art, it can be a concert ticket, it can be an airline frequent flyer point, it can be any number of things. But once you're able to tokenize it and hold it in unique forms, it does a couple of things. One is it creates a ledger that is incorruptible. So it creates a reliable, incorruptible ledgering mechanism, which, as you know from all the developing market work that you do, is sort of sine qua non of a well-functioning economy that can attract investment and operate with resilience. But what it also does is it empowers the individual to be able to hold and move their things of value without relying on an intermediary, which they may not be able to afford, which may exploit their information, which may do whatever with them. So the technology is really, really powerful, and it's important to take a step back in these conversations and understand them.
There tends to be a sense that this technology is disruptive.
Yeah.
And we spend a lot of time with policymakers, with government leaders, and the question always comes up, how is this going to help me? And is this going to undermine my sort of traditional mechanisms or frameworks of how I deal with development? what are your thoughts on how these mechanisms could really help drive economic power and development in these countries, and very specifically maybe with a focus on financial inclusion, which is a major issue in the US as well, but very much so in emerging countries?
Yeah. Well, it's a really interesting, when crypto was first developed, I think most people who were early adopters of crypto understood how transformational the power of it could be as a payment mechanism. So that ability to create a digital token that represents your ownership interest and being able to move it, whether it's fiat currency or anything else. What we've seen over the last 10 years has really been crypto adopted as an under the investment thesis, people buying tokens at a lower value and hoping that the value increases. And in a way that obscures what the more interesting aspect of crypto is, which is that ability to move value. At the moment, you have a cross-section, all demographics. You have something like 90% of the American public feel like the financial system doesn't work for them. They feel disempowered. They feel like it's too slow, too expensive. That dynamic that the American people have with their financial system is true very much so across the rest of the world. And the ability of having a system, a technology that allows the individual, particularly people of limited financial means, to be able to hold their digital assets and move those digital assets without paying 5, 6, 8, 10% to an intermediary is a profound consequence. It may not be that consequential for people who have some financial means, but for the broad cross-section of society, for people who cannot afford it, that ability to be able to own and move value is a hugely consequential thing. And it plays itself out in remittances, which I'm happy to talk about.
Yeah, actually, so specifically on the topic of remittances, an issue here in the States, certainly a large issue in developing countries where there's a huge amount of remittance that comes back from the diaspora. Maybe speak on that a little more and your thoughts on where this type of technology really plays out and is valuable.
Yeah, I mean, you know this very well. There are countries in the world for whom 20% of the GDP is built off of remittances. In a lot of emerging markets, something like 5%, 10% of GDP, if the entire GDP of the country is dependent on remittances. If you have somebody in the United States sending money back to Mexico, let's say, typically that transfer takes on the order of 3 to 7 days. It can cost, in terms of just fees, something around the order of about 5% of the value of the money you sent back. Plus, there are always questions about whether the exchange rate is actually a fair exchange rate. So you're talking about $100 sent by a migrant in the United States back to their family in Mexico, where you have some easily $5 to $10 of that $100 just get skimmed off the top. That's enormously consequential to the person in the United States who has to take the money they're trying to live off of, send a portion of it back home. It's consequential to the recipient back home, but it's also consequential to the overall economy. And that's why El Salvador, for example, has made Bitcoin a legal tender, in part to deal with reduce that cost and allow Bitcoin-based remittances to occur. So at Coinbase, the company that I work for, we have a remittance product, for example, that allows money to be remitted back to Mexico for pennies on the dollar, or for pennies, so any amount for pennies, and for that money to move instantaneously. This is something that can be done immediately, but has profound impacts, both at the individual level, but also at the broad economic societal level.
And so, in talking about these applications, obviously very relevant to an average citizen, let's say, how does a policymaker get ahead of it? What's the opportunity in being proactive versus in some ways waiting for it to play out or become an issue of scale or more relevance?
Yeah. Often people in crypto complain about the regulators not getting it and why don't they understand. Regulators have a paradigm that they've been charged by law to operate under, and it's hard for them to change that paradigm. And that's why we always say this is really something that requires political leadership. You require really the leader of a country or the relevant ministries to ultimately decide that we want to undertake a change. And interestingly enough, that has happened in virtually every G20 economy around the world. The countries are adopting enabling legislation because they understand that digital commerce, a tokenized commerce, is inevitably coming, and they want to get in front of it by creating clear rules around the treatment of the intermediaries that operate in the space, but also in the example of stablecoins, how the stablecoins are issued and treated. You even have some economies like Brazil who are engaged in a broad experiment to figure out how to digitally tokenize their entire economy because they understand. And when you talk to the Brazilian central bank, they'll say, our job is to provide a broad base of options to our population. And we're not believers in tokenization, we're not skeptics of tokenization. Our job is to be a neutral player in giving people the options that they need. And so they're working quite hard in Brazil, for example, to create an infrastructure of both law and financial infrastructure to allow the tokenization of their economy. And that's quite exciting. That's happening in a lot of other markets, and we're hopeful it will happen in the US sometime soon.
It seems a bit more controversy here in the US. Do you see that somehow playing out in some of the markets you just described, or do you think that some of those circumstances, some of those conditions are more unique to the US?
It's unique to the US, and it gets a little esoteric. In the US, we have two different market regulators. We have one, the CFTC, that regulates commodities, and we have one, the SEC, that regulates securities. So for each to assert jurisdiction, they have to claim that if they want to assert jurisdiction over the crypto, they have to, if you're the CFTC, assert that they're commodities, or if you're the SEC, assert that they're securities. I think other than Thailand, there's no other market in the world where you've got two different market regulators who have this definitional sort of moat that they regulate within. And so you don't have the situation that the US does, where the SEC claims tokens are securities, the FTC claims they're commodities, and those of us in the industry are trying to figure out who we have to comply with. So most other countries have done a fairly straightforward thing. The politicians have said, interesting technology, we want to have it adopted, we want there to be guardrails, and then they tell their regulator, create a regulatory framework around it. And so we, as a big global company, are operating with regulators in Singapore, Hong Kong, Australia, the European Union, the UK, Canada, Brazil, everywhere, essentially, in helping them develop the rules around how these markets should ultimately operate. And we're really excited about the trajectory of adoption. You're even seeing it among the central banks looking at developing tokenized-based settlement mechanisms in transfers between central banks. Visa, for example, which is the world's leading payment processor, has just adopted stablecoin-based payment settlement as a part of its infrastructure, and they're the largest payment processor in the entire planet. So the technology's coming, and it's just a matter of time when it becomes more pervasive and people begin to feel it in more tangible ways at home.
Yeah, and when you sort of speak about the application, and we touched on this a bit before, with tokenization, crypto technology, where else do you see it being relevant? Where else do you think it plays out and has a real impact? Back to our topic of economic development, financial inclusion, where are the opportunities really to adopt that technology beyond just the currency, which I think is what a lot of folks tend to think of?
Well, I'll give two examples. One is the remittance one that we already talked about. That's probably the most sort of intuitive one that people understand, because the financial system that we have, the architecture of it, really much of it dates back 100 years, where simple things like moving currency cross borders were quite complicated things, and they still remain complicated, even though there's no technological reason for them to be as complicated as they are. But the adoption is also occurring in more higher end, what we call capital markets activities. So the big banks that do trillions of dollars of capital markets activities, derivatives trading, for example, people don't know that when two banks, for example, or brokerages trade in a particular derivative, they'll reach agreement between the two sides. There's typically a 2-day settlement period, sometimes longer, between the two counterparties, where you've got thousands and thousands and thousands of people whose job it is to essentially make sure that the terms of that trade that was agreed to 2 days earlier are made good, and that the transfer is executed, and that it occurs, and that it's recorded everywhere it needs to be. If you tokenize our derivative markets, the settlement would occur instantaneously, and that risk, which is a gigantic risk that occurs to our economy over that 2-day lag period between when a trade occurs and then the settlement, particularly if that trade is on a Friday and settlement occurs on a Monday, and there's some giant market dislocation, God forbid, that may happen over that weekend. You can eliminate all of that with the instantaneous settlement that occurs with digital technology, and that's why you're seeing the Europeans and others experimenting with tokenizing capital markets activity too. It doesn't pull on the heartstrings in the way that remittances do, but in terms of reducing inefficiencies and reducing systemic risk, it's a really exciting potential application.
Yeah, fantastic. And to your point on remittances, I think where we see it often is in areas like land banks, supply chains, tracing sources in agriculture, areas where there is a lot of mismatches between information technology owners, users, and where we see blockchain and crypto coming into a lot of usage.
Well, you know this. I mean, for simple farming, for example, for coffee farming or what have you, there's a whole series of intermediaries that sit between the farmer and the final buyer in the U.S. Many of those intermediaries between the farmer and the point at which the crop is loaded onto the ship are really financing entities. They essentially front the money to ensure that it eventually gets back to the farmer. And each of those intermediaries takes a significant cut that, again, essentially bleeds out of the economy for no real purpose. You're seeing some merchants, like we have a partnership with Coinbase does with a company called Compass Coffee in Washington. They've actually now directly pay the farmers with Bitcoin, with crypto, and it eliminates that need for several of these intermediaries and makes sure the money that goes directly to the farmer rather than to the intermediary. There's a lot of archaic layers of intermediation that exist in our traditional financial system, and it's a bit unnerving for regulators to unwind all of that now that you have a technology that allows for instantaneous, efficient movement. But I think that's the project that we're in the midst of right now as a kind of a global financial system, and it's a really exciting one to be a part of.
Yeah, fantastic. So derivative trading all the way to the coffee farm. Lots to do, lots to watch. Very exciting stuff. Thank you so much, Faryar. Thank you.
Thank you so much.
All right.